Welcome everyone to Best Interest. This is Shane back for the last stock pick of the day video for the week. This is Thursday. We do these Monday through Thursday whenever the market's open. We take a look at a company stock that's pulled back on the day and run it through my screener to see if it makes it onto my watch list. Now, NextEra Energy, the one we're going to look at today, is actually in my portfolio, so I am long NextEra Energy. This is a utility company out of the utility sector. It is February 27th. Quickly wrapping up the month of February. Get in there and do your investing tomorrow because that's it, and then we're on to March. All right, for those of you who have not done so, take a couple seconds to hit those buttons down below. Hit the thumbs up button down below if you find any value in the content. Make sure you're subscribed. Join us on this journey to financial freedom. Join the vested interest community. Click the notification bell so you're notified whenever I put out any new content. It only takes a couple seconds. It really does help out a small YouTube channel like mine with the YouTube algorithm to spread the videos a little further. Share with anyone you think that might find value. And there is the thanks button down below if you want to buy me a cup of tea there or thank me for the videos. That is an option. Really appreciate everyone who's taking the time to comment on the videos, watch the videos, and definitely subscribe to the channel. You folks and gals are awesome. Really appreciate it. Now, this is the vested interest stock screener here. So this is the criteria we are going to run through in the video. Understand the business, growing free cash flow, last 4 years expected in the future, growing dividend pay ratio under 75%. Now, it doesn't apply to REITs and BDCs. REITs are required to pay out more. Business development companies typically pay out more. Closed-end funds would be another one, right? Check valuation based on dividend yield theory. We're going to look at that. Buy below current cost basis or within 15% of a 52-week low. This one is not quite there. We'll see. It needs to drop a little bit more. Return on invested capital, return on equity equal to or greater than 10%, and earnings per share forecasted over the next 5 years of 5% or better. We will not look at price to book. I look at that whenever I'm looking at financials like banks, insurance companies, companies out of the financial sector there, right? So we've got to meet 5 of 8. All right, back to NextEra Energy. And you can find them at their homepage, www.nexteraenergy.com. That's www.nexteraenergy.com. That is their homepage where I pulled this information from. NextEra Energy started in 1925 as Florida Power and Light Company, was created on December 28, 1925. In the beginning, FPL owned power plants, water facilities, gas plants, ice companies, laundry services, and even an ice cream business. In its first year, the company served approximately 76,000 customers in 58 communities and had a generating capacity of 70 megawatts, I believe that is. And that is what they're doing today. They are a utility company, and now they have branched out into more portions of the utility, and some of these weren't available back then, like wind and solar, which they own, right? Battery storage wasn't a thing back then. Universal solar, they have their hands in that. Wind, natural gas, nuclear, even other, not sure what other is. Actually, I do know they opened a hydrogen plant. It's a small hydrogen plant in Florida. Transmission lines, pipelines, state with operational projects. So you can see everything in the green. All of America and some of Canadian provinces up there are operated by NextEra Energy, and then you can kind of look at the, like I said, the battery storage, universal storage, the little decal, whether it's the orange square or the green dot, universal solar, and see on the map where they're located and what it is. All right, the reason we are taking a look at them, down 2.24% on the day. Big drop on the day. A lot of red in the market overall the last couple of days. We are talking about NextEra Energy, ticker NEE, out of the utility sector. Closed the day at $69.42. 52-week range as low as $53.95, as high as $86.10. And as I said, they are not within 15% of their 52-week low quite yet. They need to drop to $62 and some change and under. Really anything under $62 would be fine. Now, my cost basis, we're going to see that here in a little bit, is very, very low. So I would not mind picking them up under $70 per share and adding a little bit to my position here, if I'm being completely honest. Market cap of $142.799 billion, a beta of 0.58, so less volatile than the overall market. Price to earnings ratio, PE 20.60, seems very high for a utility company, but this pays a very nice dividend that is growing very fast. So some people don't mind that for this particular company. I know I don't. I'd like to see it come down a little bit more, and maybe we can get a little bit cheaper as it looks to be coming down. EPS, earnings per share, at $3.37 per share. Earnings date coming up sometime between April 21st and April 25th. Forward dividend is $2.27. They are a quarterly payer. We'll see that here at the end. Dividend yield of 3.19%. I think my yield on this is actually 4%. We'll see that here at the end too. Ex-dividend date is February 28th. So you need to buy them. Well, you needed to buy them today. If you buy them tomorrow, you will not be guaranteed the next dividend. So if you held them today or before, you'll get the next dividend, which pays out on March 17th. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance, just one source I go to for information. They see it getting back up to $84.27, which is not quite back up to its 52-week high here. Jumping over to the right, I like to look at dividend yield theory and see if the potential company is presenting any undervaluation. So to do that, we look at their 5-year dividend yield average of 2.28%. We compare it to the current 3.19% over here, forward dividend, or over here where it says forward dividend 3.19%, same number. And since it is higher than their 5-year average, that speaks to undervaluation, and quite a bit of undervaluation just based on dividend yield theory, actually almost 1 full percentage point there, right? 0.9 anyway, 228 to 3.1, 2.2 to 3.1. If they get a little cheaper, they will be more than a 1 percentage point. Payout ratio is low, and that is very good for utility companies. Utility companies are another one that typically pay out a very high payout ratio, 80, 90%, some of them out there. So to see this under 75%, I really like that at 61.13%. Now, these all look ugly. I have not seen a utility company that does not look ugly whenever you look at free cash flow. They have a lot of reinvested capital back into the business. They are constantly upgrading plants, repairing solar panels. If they have lines, they do have to do repairs and inspections on those. Transmission lines, same thing, could get knocked out with storms. Oil and gas can fluctuate based on the price of oil and gas, obviously. So there are a lot of impacts to a utility company that they're going to have capital reinvested all of the time. So some people like to stay away from companies like this because of that, but it doesn't scare me away, but their numbers never look very good. Free cash flow here, negative $277 million, 2020, and that was back in 2021. 2022, it was negative $1.4 billion. 2023, back in the green here, $1.7 billion. 2024, $4.7 billion, and they haven't repurchased any shares over the last 4 years. But when I looked at their trailing 12 months, which won't fit all on here, when I looked at their trailing 12 months, they've actually bought some shares back here in 2025. Well, at least since 12/31, yeah, so 2025. Now, jumping over to stockanalysis.com, this is another source I go to for information. I'm not affiliated with Yahoo Finance, not affiliated with stockanalysis.com. I just go to 2, if not 3 sources to look for information to make sure the information I'm getting is accurate and up to date. I recommend you do the same. As you can see here, this price target was last updated on January 3rd, so it's already a little over a month old, right? So there could be new information over the last month that goes against it, but we're going to look at it anyway because it gives you an idea of what the analysts were looking at least within the last 30 or so days, 35 days. The 15 analysts that have taken a look at this, they call it a consensus buy. Low estimate of $71 would represent a 2.28% increase from where it currently sits. It currently sits lower than their lowest estimate. Average estimate of $86.60. If it came back up to that, it would be a 24.75% increase. And if it happened to hit their high estimate of $102, that would represent a 46.93% increase from where it currently sits. All the while, you could collect that 3+% dividend yield along the way. Now, I like to get into statistics, look at return on equity and return on invested capital. The same thing, just like free cash flow. I don't think I've ever seen a utility company that passes my metrics. If there are some out there, let me know. Shoot them my way. But I can't remember any off the top of my head. Return on equity at 9.51%, not quite to the 10% that we are looking for, and a return on invested capital not even close at 3.32%. But again, I've never seen a utility company pass my metrics on this one. Now, EPS growth forecasted over the next 5 years at 8.79%. That is above the 5% I'm looking for. They didn't list revenue growth. Not something I look at on my initial screener, but it is something I do look at when I do more of a deep dive. All right, as I mentioned, I am long NextEra Energy. I do have 188.70646 shares. I wouldn't mind running that to 200 shares if this was to stay under or around $70 per share, or even drop down back into the 50s. Wouldn't that be awesome? Because my cost basis is $56.40. So I don't want to wipe away my 23.57% gain, but to add more to this position, I don't mind if it drops back into the 50s, and I would just add probably maybe even double up my position. I'm not sure. I really like the company, really like what they're doing. So I am up 23.57%, have $10,643.86 invested. I mean, I wouldn't mind running that to 12,000, 12,500, 13,000, 14,000, somewhere in there. That wouldn't bother me. Up to 13,093. If I was to sell it now, I could lock in this. But again, one that I am looking to add to at these prices. Let's wrap this one up and see where it shakes out. Quarterly payout ratio again under 75% at 67.24. Dividend growth, look at that, double digit, 10.12, and they just raised that dividend. That is awesome. That's why you're seeing some people not afraid to buy them when they have a PE of 20, right? That's a very nice growth with a relatively low payout ratio for a utility company. 10 years of growth, buyback yield is negative, so they need to do a better, negative 1.4. They need to do a better job when they're buying back shares. Wait till they're cheaper. Shareholder yield at 1.79. Maybe that's why they're buying back shares right now. They feel like they're cheap, and I agree with them. Like I said, anything under $70, $71 on this one. I added some of this this past week. Or this week, I mean, and I think last week, and I will continue to do so if it's around the 70 or lower range. Now, they do pay out on the March, June, September, December timeframe like most companies do. Going back here to August 2022, they were paying 42 cents and some fractions of a penny. February 2023, they raised it up to 46 cents and some fractions of a penny. February 2024, up to 51 cents. And most recent, February 2025, they're going to be up to 56 cents with that 10% dividend growth. They just raised this one. Really like this company overall. All right, where does it shake out? All right, it's a utility company. Understand the business. Check there. Growing free cash flow. No check there. Utility companies are up and down. They always are. Growing dividend. Yes, double digits. Love it. Dividend payout ratio is under 75%, which is awesome for a utility company, right? Check there. Check valuation based on dividend yield theory. Yes, dividend yield theory says it is potentially undervalued right now. It is not quite within 15% of a 52-week low. It is not below my cost basis. Return on invested capital, return on equity, neither one was over 10%. Don't think I've ever seen a utility company that is. Earnings per share growth of 5% or better. Yes, check there, over 8%. So we're looking at 5. If it wasn't in my portfolio, it would make it onto my watch list. Again, I will repeat myself. This is one that I am going to be adding to probably headed into March. I did add some last week and I did add some this week. I like it around the $70 or cheaper. Obviously, I would like it as cheap as it'll go, even back into the 50s. I would continue to buy. That's me. Doesn't mean you should, but that's what I'm doing. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the videos. Let me know what you think of NextEra Energy. Is it in your portfolio? Is it one you're watching? Is it one you're selling? Maybe you're part of the downturn on it right now. Maybe you're getting out of it. Love to hear from you. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like NextEra Energy you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section. I'll work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.